Welcome to Stock Talk with Mike. Today I want to talk about Unity Software's Q2 2021 earnings. I just did a video on Unity last week before earnings, and they reported on Tuesday after the bell, so a couple days ago. And you look here, the stock shot up, I think as much high as 13% intraday, settling about 10% up, and on like triple or quadruple almost average volume, so on huge volume. So clearly some big money heading into Unity. So my last video I was talking about some of the optionality that Unity has moving forward, and I just want to talk a little bit about some of the things the CEO of Unity said in the earnings call, and just some general coverage of the earnings and why I think, despite being a pricey valuation, Unity, I think, will reward shareholders who are patient and hold over the long term. So if you like this kind of video, please consider subscribing to the channel. It'd be great also if you like this video. As I mentioned, after reporting earnings, Unity climbed as much as 13% post-earnings, and it's continued to climb throughout the week here. It was around $110 or so pre-earnings. And now, after hours on Thursday evening, the time of recording here, we're at over $126 a share. It was up another 4.4% on Thursday. So we've seen a steady tick higher here. Still off the all-time highs back in late 2020, where this was trading at over $170 a share. And we saw a bit of a sell-off. They provided some fairly weak guidance last year in their Q4 as far as full year revenue guidance for 2021. And you'll see in this earnings report that I covered that they're kind of making up for that now, and actually definitely a case of under promising and over delivering. So that's what you want to see. This is a newly traded public company relatively, and we're seeing them crush earnings every single earnings call. And I'm okay having a company under promise and over deliver anytime. Two, they also had their share lockup expiry, so that definitely put some downward selling pressure on the stock, whether it was retail and various funds selling in anticipation that you might see a bit of a sell-off if there's some insiders dumping shares, but also potentially from insiders unleashing some shares onto the market. Definitely probably contributed to the downward spiral. But but seeing some steady progress here, well off the lows of 2020 now here, which were much lower levels, I think back in the $70 range. Get into the report. So their CEO reported that Unity had 48% year-over-year increase in revenue to $274 million for the quarter, and that was the first in Unity's history that they crossed the 1 billion revenue run rate. And they also raised revenue guidance for the year by another 45 million to range between 1,045 million and 1,060 million. So they've increased their guidance as well. So they beat expectations on earnings, revenue, as I'm going to get into, and increased guidance. So overall, really strong quarter. And positive, but also a knock on Unity is that they are such a big player in the gaming space. So I talked about some of their optionality in other industries and how I think that's being underlooked because it's such a small part of their business right now. Is almost 90% of the revenue comes from creating games. But I do think they have a lot of optionality in these other industries. But this is an interesting excerpt here from the CEO again, that each month people download over 5 billion applications that were built with Unity, again, primarily games, but we're growing faster than the industries in which we compete, and we're gaining share on our key markets. They get the question all the time. He goes on to say here that more than 50% of all the games are built using Unity. Isn't growth prospects limited for the future? Because they already have such big market share. Well, Unity believes we can 5 times our penetration in games from here. So you definitely have some strong conviction. Those are some strong words from the CEO. And I think that's largely because of some of the optionality they have. And there's almost no concentration risk with Unity. They don't have most of their revenue coming from a few big clients or big games. They have a ton of big customers. And we're talking customers, they're only reporting on customers that provide over $100,000 in revenue. So these are big customers. in the last quarter, they had 888 customers generating more than $100,000 in revenue. Oh, sorry, that was over the trailing 12 months, not quarter. And that was up from 716 a year previous. So they're still growing that large customer base at a very fast clip. Unity customer base is becoming more diverse as we expand from games into other verticals at a fast pace. So this is exactly what I'm talking about, some of that optionality into these other verticals. We expect to continue to see good progress in bringing real-time 3D to new industries. So I've talked about it before, whether it's education, engineering, construction. There's a ton of optionality in the 3D, augmented reality, virtual reality space that can benefit from the use of Unity's software. So I really want to focus on the guidance they gave, because I think that's really why we saw the spike in share price, the immediate reaction. And this is the excerpt here. We are again raising revenue guidance for the full year from a range of 1 billion to 1.015 billion up to a range of 1.0545 billion to 1.060 billion. So that would be about a 35 to 37% revenue growth year over year, and a $45 million increase from prior guidance. So not bad, but if you remember or you look at previous reports, you know that they actually upped guidance last year too. So when we saw that sell-off back in end of 2020 Q4, the bottom line here, Q4 20, they reported they gave guidance for the full year 21 of 0.95 billion to 0.97 billion. And I think that light guidance, relatively low revenue growth, just under 30, well, analysts were again expecting 40%, and this was in the range of just under 30. That I think that spooked investors a little bit, that has sort of that short-term focus. But even reading that report, they gave some pretty valid reasons why that would just be temporary, and they're looking at having 30% plus revenue growth for the long term, and they think that's completely obtainable. But last quarter in Q1, they upped that guidance. They actually gave increased guidance to 1 billion to the range of 1.015 billion. So they bumped it up 45 million to the previous guidance they gave. Then in this quarter, they once again bumped up that guidance. So they've bumped up guidance on the full year, back-to-back quarters here. And they're also beating on earnings, as I'm going to get into at the same time. So definitely a really bullish sign for Unity, as they're beating on earnings and revenue and increasing guidance. And that's why it goes to show, like, if you have a very short-term focus in your trading, maybe you're going to react to some of these earning calls. But it goes to show that there was quite a big overreaction to their Q4 report in 2020 around that guidance. And people aren't really focusing on the long-term vision of this business. Clearly, it was a blip on the radar, and never even was realized, right? Again, under-promising and over-delivering here. And if we look, they actually gave, on their report, earnings per share were actually negative 2 cents. So very close to positive earnings here. And that beat analyst expectations by 10 cents. So analysts were expecting negative 12 cents a share. And they beat on the revenues ultimately by almost 31 million. And next quarter, analysts are expecting negative 7 cents. So again, if they beat, they could very easily be here net positive earnings, potentially even next quarter or even on the full year next year. I know they've recently made some acquisitions as well. I may have some impact on the bottom line. But if you look at the history here since they've gone public, the graph here at the bottom, you can see the dark blue one is consensus, like, so analysts' expectations, and the light blue is the actual, and you can see they've beat quarter after quarter. And again, you see that light blue getting closer to the zero line, closer to profitability, and projections by analysts are expecting the same. So definitely trending in the right directions, even on the earnings front. Unity does trade expensive, but it's in a growing industry, in the gaming industry, and also in a really interesting space just in the 3D, VR, AR space as well. and moving into all these other markets. They have a reoccurring subscription revenue model, which always tend to trade at a premium as well. And this company has a huge runway ahead of it. And I think will grow into the valuation over time. And that's the strategy that has paid off for me with a number of these high growth stocks, investing in companies that have huge growth runways ahead of them. And we can ride those tailwinds and grow into those valuations. We'll worry about earnings as they mature. And as that revenue starts to slow down and they stop investing so heavily in growth and disrupting the industry. So right now they're trading at around, with revenues expected for the full year 2021 now at 1.06 billion. They're trading around 32 times sales. So that's quite expensive, obviously. But if you look forward to next year with analyst expectations of 1.34 billion, with the way they're on track, I could see that being even 1.5 billion, especially if they have around a 40% growth rate again next year. So that would put them at about 23 times sales. I think that's totally reasonable that they fall somewhere in that category in 2022 as far as revenues are concerned. And you look out even further, that would put them, so if they continue to grow at about a 40% clip, 2023, that would be revenues about 2 billion and they'd be at about 17 times sales. So you see even, if we see some of the sideways action, you can see how they could grow into that valuation. Still, I realize 17 times sales isn't cheap, but that's definitely getting closer to a reasonable valuation at that point. So I think you're paying a bit of a premium for quality here, picking companies I want to be invested in the long term. I never would sacrifice quality company based on, for a valuation. So anyways, that's what I got for you today. Again, Unity, I think, reported some great earnings here, and I think is a great long-term hold. Definitely on some big pullbacks, sell-offs, I think it could be a good time to weigh in. As I mentioned in my previous video I did last week, I showed some of my buying of Unity over the past year. And, some of these lower suppressed levels that we had seen earlier this year, I'd definitely been accumulating shares, and this is a top 5 position now in my portfolio, and obviously really happy with the recent earnings report. Thank you so much for watching. Happy investing.